Welcome, everybody, to another episode of the 2 Minute Drill with yours truly, no risk, no premium. Guys, if you're new to the 2 Minute Drill, this is a 2 minute drill, kind of, sort of, maybe a little bit more, maybe a little bit less. That just gives you levels for SPY tomorrow, our expectation of what to expect at each level and what to do. So let's just dive right in. But welcome, everybody. Now, look, today we said our price target was what? The 20-day moving average, which is this green dotted line here. Well, smacked it right on the head. And then we thought we'd get a back test and have, about 388, 389 hold, which is about 3,900 on ES. Then we thought we might have 38.55, or I'm sorry, 385 hold, and even the 383 90, which was the breakout area of SPY into the gap we thought it would hold. Well, it didn't. It just knifed right through it all. It left everybody confused, caught a lot of people off sides, right? There was that call scalp opportunity there when we got out to the 383.90 level, which I was saying on it, ES was 38.55. You could get a scalp there. Some did, but ultimately puts was the name of the game all the way down. And now we just went down and straight up back tested our breakout area, right? Back tested the breakout area. And now we entered into a new gap to the downside from this is Thursday. Here is Friday, right? So what is my expectation tomorrow? Well, not much. Why? Because we've got GDP numbers and we've also got all 37 million of the Fed speakers talking. Just kidding. Just all the main ones. But Powell starts right at 9 a.m. Eastern Standard Time. So what does that mean? It means I'm probably just going to be chilling on the sidelines in the morning. Okay. GDP numbers come out 8:30, I believe, in the morning. And then we have the Fed speakers, right? Also today, guys, I did say on Sunday, the consumer confidence index, the CCI, came out right about 30 minutes into market open, which started the sell. I think it was at the lowest levels since 2013. So that's not good. Consumer confidence is pretty much what is going on with consumer spending. If consumer spending is down, the economy will be slowing down. Now, this is not an econ lecture, but you do need to know the macro sense of things when you're trading a market, especially when you're trading indexes. All right. Now, what am I expecting tomorrow? I would love to see if we got a dip back down below 380, okay, to close this gap down and then immediately spike back to 382. If we do that, I would think if we got back to 382, or you could be watching ES, if we got back to 38.55, we could definitely continue use this as just a back test and try to again to go higher. Now we are in a bear market, which typically means what? You fade the pops. Okay. Any calls should be seen as counter trend still. That's my expectation. I would love to see 378 and then a 382, like 380 to 382 recovery, where I'd probably take a stab long there. Now, if we jump to 385, right, or 384, like 383, 384.90 area in here, and we fail, I would probably take a stab low, or a stab low, a stab short there. Okay. But other than that, guys, tomorrow is a big day for the market, especially with all the Fed speakers in the morning, the GDP data. So I'm definitely going to be using the morning to just gauge the market direction of where we're going to go. I'm not trying to get faked out or anything. I'm going to let the Fed speakers talk, listen to them. So I might not be on live. I might stream it on our live in our channel, but I will be listening to them because it's important to hear if they are speaking. All right. But just something else to know. Hey, under the 5MA here, 382. That's why I also like that 382 level as somewhere to know, hey, tomorrow when this opens, if we can get back above it on any dip, we can get long. But underneath 376, I am definitely getting short. Okay. Riding it down to 372, 370, 365, 362. Under 362 is horrible. Okay, is really horrible. I would say 360 would be a psychological level, but we'd likely go to see new lows, probably 100 points under that on the SPX. So I'd be looking at about 354, 349 area. We know this is a 50% retracement from the COVID low to the COVID high. Okay, so everyone's still got all their eyes on 349, but we have to see what the action tells us because we still could continue higher. We are looking at this gap up here to 401 as well. If we do want to get upside numbers, it would go 382, 383.90, okay, 385.15. I'd say about 387, 389, 391, 393. Okay, then 385 or 395 would give us into the gap there. All right, all the way up to 401. Guys, thank you for rocking with us. If you're new to it, like, subscribe, whatever. Tell your friends, tell your mother. I don't care. But get your levels out, get ready, do your homework, and we'll see you bright and early in the pre-market. Peace.